What's up YouTube, Alvaro here with the Bilingual Stock Market channel. On this channel we talk about the markets and we do it in English and Spanish as well, so you can pick your preferred language. And in this video, and as I do it Mondays through Thursdays, I want to make a quick stock market update, so I want to break down some technicals, going over the S&P 500 and the NASDAQ 100, which are the most important indices of the United States stock market. And at the end of the video, I am going to break down from a technical standpoint as well 4 stocks that tomorrow are going to be on the very top of my personal watch list. So without further ado, let's get started. And when we still have 10 more minutes in today's trading session, we are having finally, guys, at last, a red day all across the board except for the NASDAQ 100. I think that the NASDAQ 100 as of now is trying to pull up a green day. However, the Dow Jones Industrial Average is down 0.27%, NASDAQ is down 0.31%, and the S&P 500 is down 0.33%. And I was forgetting about the Russell 2000, which is the worst performing index out of the bunch, and as of now is down almost 2%, 1.80%. And as usual, guys, when I am editing the video, I am going to leave on your screens the final close of the 4 major indices. And today we had the CPI report, and that's the reason why we are having a red day all across the board. In fact, guys, I think that the only sector that is in positive territory as of now is the tech sector. Other than that, the other 10 sectors that trade inside the S&P 500 are trading as of now in negative territory. We can see that XLK is up 0.36%, basically because of Google, Apple, and Microsoft, because those 3 stocks, which are very important and very heavy inside in terms of weight inside the S&P 500, are having a very positive day. And I think that those 3 stocks actually reached a new all-time high in today's trading session. But other than those 3 stocks, we are having a red day, as we could have expected, because the CPI data report came out way, but I mean way worse than expected. So analysts and economists were expecting this report to reflect an inflation of 0.5% in June, and it came out at 0.9%. However, guys, the markets didn't sold off the way that at least I was waiting the markets to sell off. And actually, in today's trading session, both the S&P 500 and the NASDAQ 100 reached new all-time highs. So I don't know, the reaction of the markets was a bit weird, to say the least. The 10-year Treasury yield shot up, and as of now it is trading at 1.41% when it was in the lows 1.3%. So yeah, we can make the case that the 10-year Treasury yield shot up. And before starting to record this video, guys, I was listening to the CEO of Goldman Sachs. He was on the air on CNBC, and he said that at Goldman Sachs, I mean, we're talking about a very important and huge bank here in the US. And he was saying that they are expecting a very healthy growth in the next months, and that they believe at Goldman Sachs, once again, I'm not talking about an analyst over here or an economist over there, that at Goldman Sachs also believe that inflation isn't going to be an issue later on down the road. So maybe that's why we didn't see a massive sell-off in the markets as we saw back in May, when we got the first CPI data report coming out way worse than expected. So let's see what happens, guys. It looks like the markets are, I don't know, are believing the Federal Reserve. When the Federal Reserve says that inflation is going to be transitory, and that once the disruptions in the supply chains get figured out, so inflation is going to come down. We will see what happens over there. By the way, this morning, JP Morgan and Goldman Sachs reported unbelievable earnings. I mean, JP Morgan reported very nice earnings, and they are actually going to buy back shares. But in the case of Goldman Sachs, guys, I mean, unbelievable earnings. They actually beat on EPS by 50%. I mean, unbelievable earnings. And remember that tomorrow, before open, we are going to have some interesting earnings as well. So tomorrow we will have Bank of America, Delta Airlines, Wells Fargo, Citigroup, and BlackRock reporting before open. So watch out for that. There goes the market. So watch out for that, because we might see another, I'm not gonna say another volatile day, but I mean, yeah, it might be a volatile day when it comes to the financial sector, which actually closed the day in negative territory, down 1.07%. So let's see what happens tomorrow with these earnings reports. And when it comes to the indices, guys, so what is going on in the S&P 500? The S&P closed down 0.35% at 4,369 points. And once again, we have a new all-time high in the case of the S&P 500 at 4,392 points. And let me pull up here, guys, the 1 day, 1 minute, and take a look at what happened this morning. So as soon as the CPI data report came out, the futures fell off a cliff. But as soon as the trading session opened, take a look at the S&P 500. It went up a lot. It reached a new all-time high at 43.92, and then we saw the S&P 500 selling off into the closing bell. So what could potentially happen tomorrow? Who knows, guys? I mean, we really got a CPI report way worse than expected. So can the S&P take a rest and maybe pay a visit to, let's say, 43.30? Okay, and taking into account that we closed at 43.69, so that would be a healthy pullback in the case of the S&P 500. That would be the very first important area of support that I could call out in this video, 43.30. If 43.30 happens to be broken to the downside, then obviously watch out for 4300, which is a previous area of support and resistance, and it is also a former all-time high in the S&P 500, and that level actually coincides with the 50 SMA and the 4-hour chart. And obviously from a resistance standpoint, we are pretty much talking about the new all-time high at 43.92. We can see the RSI of the S&P 500 at 61 points. I mean, it is a bit high, but we can make the case that we have already seen this index trading with the RSI at 85 points, so there is nothing wrong with this tape. And I don't know, guys, I don't know if maybe overnight, you know, the markets are going to react in a negative way to the CPI report that we got today. I don't know. I don't know what to say here. So I am still, you know, an advocate of having the S&P 500 pull back a bit, as I just said, 4330, 4300. So let's see what happens over here, because as a wise man said once, the trend is your friend until it's not. And as of now, the trend is pointing north. It's pointing out north. So, and in the case of the NASDAQ 100, this index also reached a new all-time high today, and the NASDAQ 100 almost pulled up a green day today, guys. So the NASDAQ went down 0.02% and it closed at 14,874 points. So let me pull up here the 1 day, 1 minute, and we have pretty much the same tape that I just showed you guys in the case of the S&P 500. So the futures of the NASDAQ 100 fell off a cliff as soon as the CPI report data came out today at 8:30 a.m. Eastern Standard Time. But as soon as the trading session opened, the NASDAQ 100 sold off a bit. The bulls managed to find support at 14,854 points, and then this index went on an absolute tear. And take a look at this, guys. Finally and at last, the bulls managed to hit 15,000 points in the case of the NASDAQ 100, and after that new all-time high was reached, this index pretty much sold off for the rest of the trading session. But in the case of the NASDAQ 100, I mean, the RSI also dropped, guys. Yesterday, well, it was at almost 80 points, and as of now, we can see the RSI of this index at 65 points. So yeah, we can make the case that, I don't know, take a look at these, guys. So the RSI of the NASDAQ 100 at 64 points, as it is right now, is the lowest that the RSI of the NASDAQ 100 has been since June 22nd. Oh man. I mean, this index has been on an absolute tear. So tomorrow, are we going to see another pullback in the case of the NASDAQ 100? I hope so, in which case I am going to be looking at 14,670 points, which is a previous area of support that already acted twice for the bulls in the NASDAQ 100. And if that area of support happens to be broken to the downside, I am going to be looking at 14,581 points, which is also a previous area of lower support. It is also a previous area of resistance, and it is also a former all-time high for the NASDAQ 100. And on top of that, we have the 50 SMA on the 4-hour chart getting closer to 4,580 points. And from a resistance standpoint, guys, I mean, 15,000 points. This is absolutely unbelievable. There is nothing wrong with this tape. The NASDAQ 100 is trading above the moving averages, and I mean, whatever, guys. You know that I am longing for a nice pullback in both the NASDAQ and the S&P 500. And when it comes to AMC Entertainment, AMC had another very tough day today, guys. It went down 7.65%. I actually believe, guys, that the short interest of AMC dropped down to 18%. So what happened over there? We don't know. So maybe the hedge funds already covered their short positions, and that's why the short interest dropped so much. As of now, AMC is into oversold territory. We can see the RSI on the 4-hour at 29 points. And I mean, this chart is starting to look very, but very ugly, guys. And the bulls couldn't hold 40 bucks into the closing bell. So this is starting to look very, but very ugly. So the next important area of lower support for AMC is at $37.20, or let's say $37 flat, which is a previous area of lower support that already acted as such for AMC back on June 3rd, and it also did it back on June 2nd. And if that area of support happens to be broken to the downside, then watch out for AMC paying a visit to $29 or $30 per share, which is a previous area of support that already acted as such for AMC back on June 1st, and it also acted as a resistance back on May 27th. So this is starting to look very, but very ugly, guys. And you guys know that I own 50 shares of AMC. I am still diamond handing my shares, but I only have 50 shares of AMC. So what am I thinking about those shares, guys? Well, if AMC keeps on collapsing, I might average down my current position at maybe $30, or maybe, I don't know, the lows 20 bucks, in which case I am going to buy 50 more shares, and then I am going to start to sell covered calls. All right, because I am at 52 bucks, guys. So as of now, I am having a sizable unrealized loss in the case of AMC. And is momentum gone? I don't know, guys. I think that for the bulls is going to be absolutely critical being able to hold $40. I think that if this area of $40 and $37 happens to be broken to the downside, momentum is going to be gone, and a lot of people are going to start paper handing their shares of AMC Entertainment. And now let's go ahead and take a look at DraftKings, which is going to be the second stock of this video. And in the case of DraftKings, this stock went down today 2.91%, and it closed today's trading session at $47.73. However, guys, and despite the fact that the stock of this company went down today, we got good news this morning, because ARK Invest loaded up $7 million more on DraftKings, and they said this morning that according to ArkInvest, they estimate that the sports betting market will grow from $9.5 billion up to $37 billion by 2025, and that's a reason why they actually kept on loading up on DraftKings in today's trading session. And according to my opinion, those are very but very good news for DraftKings. And as of now, guys, I am on a swing trade on DraftKings. I own 120 shares at an average cost of $50.88, and as of now I have an unrealized loss over here of $381, but I am not concerned at all about that unrealized loss. I'm not gonna say tiny unrealized loss. I mean, we're talking about almost $400, but I am very but very bullish on this stock. So what's my plan when it comes to the swing position that I just showed you? And mind you guys, take a look at the 4-hour. Can we make the case that here, maybe tomorrow or on Thursday, we could potentially see a death cross unfolding on the 4-hour? Is the 50 SMA going to cross below the 180 SMA? So watch out for this, because as you guys know, the death cross is a bearish sign that suggests downside for any stock out there. So let me zoom out over here. And what's my plan when it comes, as I was saying, to the swing position that I just showed you? So if this death cross happens to unfold, and therefore, if DraftKings happens to keep on dropping and pays a visit to $45.70, that is a price, guys, in which I am going to be loading up on DraftKings in a very aggressive way. At that price, I am going to be willing to pick up 100 more shares of DraftKings in order to average down the position that I just showed you. And why $45.70? Well, because that's a previous area of lower support that already acted as such for DraftKings on 1, 2, and 3 occasions before. And for all intents and purposes, guys, my price target in order to close this trade is going to be $56. $56 is a previous area of resistance that already acted as such for DraftKings on 1, 2, 3, and 4 occasions before, and it also acted as a lower support for this stock in the beginning of May. So let's say that I buy 100 more shares of DraftKings at $45. That is going to decrease my average price down to 47 or 48 bucks. So if I happen to close this trade the way that I am describing it at $57, I could be potentially locking in a profit of almost 15%, which would be a very solid profit. So watch out for DraftKings, guys. It is getting closer to $45. We can see the RSI on the 4-hour at 34 points. So the RSI is already low. So we can make the case that if DraftKings actually happens to pay a visit to the $45.70 or $46, the RSI is going to be even lower, and that is going to increase the likelihood for the bulls of DraftKings to find support at a previous area of support and then bounce back up. And the next and third stock of this video is going to be good old Ideonomics, and this is a stock, guys, that you guys always tell me to break down from a technical standpoint. So what is going on in the case of Ideonomics? This stock went down today 4.65%, and it closed today's trading session at $2.46. And guys, the fact that the bulls of Ideonomics couldn't hold $2.50 in today's trading session is not a good sign at all. So $2.50 is a previous area of lower support that already acted as such for the stock of this company on 1, 2, and 3 occasions before, and it is also a previous area of resistance that already acted for Ideonomics, or for the bulls of Ideonomics, back on January 6th. So this is not a good sign. And take a look at how, guys, here on the 4-hour, the death cross played out perfectly on the 4-hour. Here you guys can see the 50 SMA crossing below the 180 SMA, and what happened right after that? Well, Ideonomics kept on dropping. So I'm thinking, guys, that if Ideonomics keeps on dropping, the next important area of lower support is going to be at $2.20. It's a previous area of lower support that already acted as such for Idex back in May, and it also did it back in April, and it is also a previous area of resistance that already acted as such for Ideonomics back on December 18th. So we could potentially make the case that $2.20 might be worst case scenario for Idex, and since that area is a previous area of support and resistance, it could be a very tempting area in order to pick up shares of Ideonomics to take a swing trade. If so, I would say, or if I happen to take this trade, I am going to be looking at $3.10 as a possible and probable price target. $3.10 is a previous area of resistance that already acted as such for Idex on 1, 2, 3, and 4 occasions before, but it is also a previous area of support that already acted as such for Idex back on March 10th, and it also did it back on January 22nd. So let's say that we purchase shares of Ideonomics at $2.22. And if we sell out of those shares at $3.10, we could be potentially locking in a profit of almost 28%. So watch out for Ideonomics, guys. And mind you, if I happen to take this trade, I am going to take it with a stop loss. Because if $2.22 happens to be broken to the downside, what are we looking at? $1.66, guys, or maybe $1.83. So I would take this trade, guys, no doubt about it. You guys know that I am long Ideonomics. I have a long-term position, but I already, built up the position that I wanted to have. So I am not going to keep on purchasing more shares when it comes to that long-term position. So I would like to take a swing trade, but I have to be very careful, guys, because if the bulls of Ideonomics cannot hold $2.20, we could see lower prices over here, and that is a trade in which I don't want to be involved. And the last stock of this video is going to be Nokia. The ticker symbol of Nokia would be NOK. This stock went up today 9.50%, and it closed today's trading session at $5.88. And not, guys, this was not caused by Wall Street bets. So Wall Street bets actually gave rise to this massive move to the upside that we saw back in January, in which Nokia almost reached $10 per share. But in this case, we got good news this morning because this company increased their financial guidance for fiscal year 2021, and that's why the stock of this company pulled up almost 10%. So I am going to zoom in here on the 4-hour, and do I want to take a trade on Nokia? I mean, I might if I happen to see the stock of this company paying a visit to $5.16. $5.16 is a previous area of resistance that already acted as such for the stock of this company back on May 20th, and it also did it back on May 10th. So I think that might be an area in which the bulls of Nokia are likely to find support if this stock happens to drop. And take a look at the RSI, guys. It is at 68 points. It is a bit elevated. All right. I mean, this is a stock, as you guys can see over here on the relative strength index chart. This is not a stock that usually trades with the RSI being so elevated. So this is a factor that you guys have to consider if you're thinking about taking any trade on Nokia. So if this stock happens to pay a visit to $5.14 or $5.16, and if I happen to notice that the stock of this company was able to find support over there, I could be potentially, picking up some shares of Nokia, in which case my price target is going to be $5.69, which is a previous area of resistance that already acted as such for Nokia on 1, 2, 3, and 4 occasions before. Since the range is very narrow, guys, the range that I am thinking about when it comes to taking a trade on Nokia, I am talking pretty much about a scalp trade. So this would be a trade in which I am going to be purchasing 500 or 600 shares of Nokia, in which case I could be potentially locking in a profit of almost 10% from $5.14-ish up to $5.66. And with Nokia, I am going to wrap up the video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember, guys, and keep in mind that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays as soon as the market closes, or 3 or 4 hours actually after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to the channel, and you also need to activate the notification bell right up there. Follow us on Instagram, guys, at Bilingual Stock Market. On our Instagram account, we are posting news and information on a daily basis, and most importantly, here and there, when the volatility of the markets lets me do it, I am posting call outs through our Instagram stories about the stocks that I am about to purchase, and I also did it today with Bed Bath & Beyond. So go ahead and follow us on Instagram as well at Bilingual Stock Market. And remember that this is a Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, and we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours after the market closes. Peace out.